Hello, everyone. Welcome back to another Is It a Good Investment series. In this series, Brian Stoffel and I take a stock that neither of us has ever researched before, and we do so live. So you're going to see us digging into this company's SEC filings, asking ourselves questions, filling out the investor checklist that we have, all in an effort to figure out, is this company worth investing in, or could it be worth investing in at today's prices? Brian, what stock are we talking about today?
Today, we're going to be looking at Enphase, a company that I know nothing about. I put out on Twitter about an hour ago, I thought maybe a medical device company, maybe an oil and gas company. Someone informed me that it's involved in solar power.
Yes.
Okay, well,
So
there we
this is
go.
I can tell you that I've never looked at this company as an investment before, but I'm a customer. I
Oh, really?
have I have solar panels on my house. I have for a couple years, and the app and the tools that I use to interact with this company are through Enphase Energy. And I know this company makes basically solar panel accessories. So they make like the inverter that goes into it.
Okay.
They make like accessories that go around the solar panels. And unlike many solar panel companies that are publicly traded, this one has been a mega winner.
Huh.
The
So
Yeah,
it's all going to be about the moat, right?
it's
Because
all
if
gonna be
this
about
is
the moat.
if it's just a manufacturer, we, the customers, we capture the value, which is great.
Correct.
Like there's
Yep.
nothing wrong with that. But as an investment, you don't want to be in that because
Correct.
the customers are. That's interesting. Now, for what it's worth, I also have solar panels on the container home that I live in Costa Rica. However, that does not come with an app that controls things. This is literally just wires that are connected to an inverter. So that I now I'm wondering, is there technology in ours too? I don't know.
Right. It could be. So anyway, we're going to figure all of that out. Thank you so much to stockcard.io for sponsoring today's video. But Brian, let's start on our investing checklist. So the ticker here, ENPH. So this is a $191 stock.
Ooh,
It's
this is a big company.
$26 billion market cap. I'm going to make some guesses right now. So I'm going to say, does it have recurring revenue? No, that's a guess. Is it profitable? I'm going to guess yes. Is it free cash flow positive? I'm going to guess yes. And this thing, while it's down from its high, I know that this company has walloped
Yeah.
the market since it came public. So, all right, so that's the starting point there. So let's head on over to StockCard. ENPH is the ticker symbol. Enphase Energy. And I need to share the screen. Sorry, my screen sharing thing was having a little bit of trouble, but I think I have the way to get around it. Nope, wrong one. Show this on the screen. Here we go. So Enphase Energy, it is so down today, but yeah, up
Oh, yeah.
2,500% all time. So this has been a mega winner. So it came public in looks like March of 2012 for $7. Currently
Okay.
191. So they are doing something very right. So we'll click over to the company's investor relations page. But before we do that, Enphase Energy is a global energy technology company. The company delivers smart, easy to use solutions that manage solar generation, storage, and communications on one platform. The
I just
company,
I'm gonna say that communication part, I bet, is where the moat is. Like if you
okay.
if you start using an app or it becomes integrated into how it's being run, I can see how that becomes a moat.
Okay, I can actually. I think so I don't pay Enphase to use that. I just use that to monitor
Uh-huh.
it from my relationship with Enphase. I paid my solar installer. They put the
Mhm.
panels on my. They bought the inverter, the micro inverters
Mhm.
from Enphase, and then that also connects to the internet, everything like that. But I don't pay Enphase an ongoing fee.
Okay. All right.
So
Interesting. Right.
I think that they're in a part of the value chain where, the solar panels themselves have gone down, down, down in price, but the micro inverters, they use that, like, take the DC power, turn it into convertible power, power your system. That seems to be a much more concentrated market where there does seem to
Mhm.
be some pricing power, or at least the ability to maintain what they're doing. Um, that's my interpretation of it right now.
Okay.
And provides a fully integrated storage plus solar plus storage solution. I saw on their website that they did have a battery. that was on there in some way.
Okay.
Geographically, it derives the majority of its revenue from the United States. Okay. So free cash flow, I see positive 300 million. Earnings per share, I see $1. Long-term debt, I see about $1 billion. PE ratio of 190. I would say that's not meaningful, likely given this is a growth company. This is a meaniful number, though.
Yeah, that's a pretty
Price
high
to
number.
sales of 20. So boy, are investors pricing this company
Yeah, this isn't even a
for
software
growth.
company.
Right. Right. So let's see what the sales growth has been. Last fiscal year, 78% sales growth. Over the last quarter,
And it says,
55%.
importantly, it says it's a rise in the growth rate, so it's accelerating too.
3-year growth rate of 64 percent. So very, very high, very high growth rate there. And that's going to go. Profitability. Earnings is positive. Last 12 months, it's positive. Gross profit margin is about 40%,
Hmm.
roughly. Cash, a decent current ratio. They did have that debt that we talked about, so we're gonna have to look into that. Free cash flow positive. 3-year free cash flow compound annual growth rate of 200%,
That's great.
essentially.
To be
So
clear,
they've focused on that.
about that growth rate accelerating, what that tells us is if we're familiar with the S curve, if that growth rate is accelerating, that means you're still on the lower part of the S curve where you're about to go parabolic. So, I mean, that's a great sign for investors.
Right. Very much. Okay, management effectiveness, returns on capital of 10%, return on assets 7%, return on equity of 25%. So they're already starting to generate that. We'll have to check what kind of operating if they have operating leverage ahead of them and all that kind of stuff. And that's that. So, all right, let's turn this off and let's go over to the company's investor relations page and start digging. Okay.
All right.
Letter to shareholders. Let's look at that.
Love it.
Investor presentation. Let's look at that. Overview. Okay. About us, purpose and values. Our purpose, advancing a sustainable future for all. So I'm going to
Too
substitute mission.
advanced. Yeah.
Founded in 2006, Enphase transformed the solar industry with our revolutionary microinverter technology, which turns sunlight into a safe, reliable, resilient, and scalable source of energy to power our lives. Today, our intelligent microinverters work with virtually every solar panel made. And when
Hmm.
paired with our award-winning smart battery technology, we engineer one of the industry's best performing clean energy systems. The Enphase energy system enables people to make, use, sell, save, sell, and their own power. This includes our industry-leading app, that's what I use, which provides unprecedented data and control in the palm of your hand. I mean, I'll tell you, the app tells me, give me a picture of my panels, which ones
Hmm.
are doing it, how much each one are making, and like how much sunlight is hitting them. So that's what it
Okay.
tells you. By the way, microinverters, I'm pretty sure that this means that each panel itself has its own inverter. Previously, there was like one inverter that controlled the entire system, and the
Well,
reason
that's how
that
mine works. That's
okay,
that's how mine works in Costa
so,
Rica. There's just one inverter on the side that collects all of it. So
so what
that's a
that
good.
means, though, does that mean if like one of your panels isn't getting sunshine, that the whole system is down?
For me, no. But what it does mean is that if something happens with a micro or with our inverter, then the energy coming from all the panels doesn't work. It's better to have a
Correct.
microinverter for each panel. It's kind of like the Christmas lights, like if one goes
Yes,
out, then they all go out, as opposed to each one being independent of the other.
it's building in redundancy, right? It's building in
Exactly.
redundancy to the system so that if one doesn't work, the rest of the system still works. That's what microinverter
Exactly.
is versus the inverter. At least it's my understanding of it. For the first time in the evolution of our century-old grid, people can get paid for the clean energy they produce and share with their communities, helping to build a new energy future. So personally, I've been waiting for Tesla's. I've been looking to buy a Tesla Powerwall, but you have to buy a solar system now to get a Powerwall, and I already have a solar system, so I
Mhm.
might be looking into this as a consumer.
Okay.
This clean, free, abundant source of energy can power our lives. You see a home with solar panels on it, there's a good chance it's an Enphase home. We've installed more than 42 million microinverters on approximately 2 million homes in 130 countries, helping millions of people to gain access to clean, affordable, and renewable energy. Enphase is putting people and their power at the center of our shared Enphase, powered by people. All right. What we believe is to show up how they work. Customer first, integrity, innovation, quality. Okay. Founded in 2006, 2,300 employees, 3,900 installers worldwide,
Okay.
42 million microinverters shipped, savings, terawatt power systems, and 30 gigawatts of DC. Okay. See how we became it. Founded in 2006 by Raghu Belur and Martin Fornage in California. You want to write down those names just so we
Yep,
know
doing it right now.
what band this
Martin
was?
Fornage. Got it.
Martin Fornage and Raghu Belur. 2008, their first microinverter-based solar system was introduced. 1 million microinverters shipped.
3
Listed
years
in the
later. That's pretty
NASDAQ.
quick.
Fourth generation technology, 10 million. Sixth generation technology, AC modules. Seventh generation technology, 1 millionth microinverter installed. Started shipping our IQ batteries to countries. So this is the
Interesting.
batteries that they have, 32 million. Great. Cool. So it looks like they have the IQ Mite inverters, the EV chargers,
Huh.
the highest standard. So this took me to a different site. Okay, I know that you can't see that, but let me go through here. So they have microinverters. They have the storage. This is their batteries. So it looks like they have a whole bunch of batteries.
Oh.
So if you're scoring at home for optionality score, they're more than
Yeah.
just microinverters now. So this is their battery system. Our battery leverages a distributed architecture to provide maximum reliability. Each battery includes multiple bidirectional IQ microinverters to switch energy from DC to AC and back again for safe, reliable operations. So even if one stops, we can
There it goes.
keep the power flowing and the lights
Mm-hmm.
on. Yeah. So real quick, when you're making power from your solar panels, that's DC energy. Your house and everything you own runs on AC, so there has to be a conversion for it to work. So this is like critical infrastructure. Are built
I
on
know what it's like
distributed.
when they blow too, because I've had that happen on our
Oh
house. Like
yeah,
you've got to open it up and you've got to put this piece back in. And I mean, it's yeah, we're in rural Central America, so we don't use this stuff.
cool. All right, so these things seem really cool. So they have something for installers to get
And
you
I'm
going.
I'm curious about those installers. Dion said, are those 3,900 installers contractors? I would say they'd have to be.
Yeah. So the company that I use is just a local one, and I'm guessing that they're just a licensed reseller, right? They're a solar panel installer, and they don't make the solar panels, they don't make the inverters, they
They
buy all
put them
that
in.
equipment. They just
Yeah.
buy all that equipment. So I would guess that that's who they're talking about when they're talking about this.
I'm
So you can buy
curious a little bit
accessories.
about those charging stations. Did you see that? If you go up a little bit?
Yeah, that took me to
It-
Clipper Creek. So I don't know if that was an acquisition that was made,
Okay.
but this is
Okay.
obviously a home install system for charging cars, most likely not named Tesla.
Right.
Documentation. Yeah, here's look at the app that so that's the app for installers. All right, so that might be a little bit of a moat then, if like
Yeah,
you're
I
using the
agree.
app to figure out and come up with like the system installs and all that kind of stuff. And I can tell you, when I was buying my system, they did use an app that was like that, and they showed me like a picture of my house with like how they would go on there, so I can see that providing some lock-in costs. So let's try the investor relations. Okay, cool.
I'm going to be very curious about concentration risk. Glitch Life
Yeah.
just mentioned, and I think this is great, that they provide the solar panels for Next Era Energy, and they're the sole providers or suppliers for that. So I'm curious about that. Is there
Um,
concentration risk here?
okay. So here's the CEO letter to shareholders. Okay.
That's not a founder.
That's not the founder. Can you read that, or do I have to zoom in? This is
You
kind of
zoom in a little bit more. It's pretty
formatted
small.
weird. Um,
Brad.
Badri
Oh, Badri, man, see?
Kothandaraman. So he's the president and CEO. Obviously, I'm terribly sorry if I'm just mispronouncing your name, but he is not the founder, but he is the president and CEO. We have never lost sight of three cornerstones guided us: innovation, quality, and customer experience. Okay. 2021 was strange. We want to return to life. It didn't work out that way. The demand for our products was robust, and we had our hands full with global supply challenges.
I get
Supply
that.
chains were impacted. An Enphase in the solar industry were enormously resilient. We're pleased with our performance. We resolved key supply issues that preventing us from ramping up and went strength to strength in solar microinverters. We started to ramp up battery storage systems in the US throughout the year. Yeah, I wonder if I can't imagine that they're making their own batteries like Tesla is. They must be buying those in the open market. The realization that our systems are now on the path of power with batteries caused us to step up our field support for installers, institute 24/7 support, released the new microinverters, which can form a microgrid during a power outage using only sunlight, providing backup power even without a battery. That's cool.
Wow.
My solar system can't do that. We made 4 acquisitions during the year. 3 of them focused on software and services for our installers.
See,
That
that might be where the moat is.
right, or at least one way that they're actually making a moat. Our
Right.
inaugural ESG report. I'm proud of our cultural playbook. Our strategy is to build the best-in-class home energy system and deliver them. Highlight our accomplishment. Man, is this formatted ugly? For the full year, revenue increased 78% sequentially to 1.4 billion.
That
We
that
shipped.
makes no sense whatsoever, but
I know.
you
Just
don't need to
say
say sequentially.
right.
That's
We
not
shipped
necessary.
10.4 million microinverters compared to 6.8 the year before. So
Wow.
despite supply chain, boy, are they growing. Our non-GAAP gross margin, adjusted gross margin was 40%, up 60 basis point, primarily due to disciplined pricing and cost management despite inflation. That's
I
impressive.
wonder but I
That's
wonder what's
impressive
gonna
for a
is
hardware
that gonna
company.
continue? I'm curious about that.
We exited the year with 1 billion in cash. We completed our issuance of green convertible notes that resulted in net proceeds of 1.2 billion. So they got that cash from they only had a billion in cash, but they raised 1.2 billion from a convertible note. Do you want
I'm
to explain
guessing
what a
this
convertible
balance
note
sheet
is real fast?
a convertible note is something where it can be debt that needs to be repaid, but it might also just convert into shares of the company,
Right.
so there might not be any money that gets paid out. What ends up happening is that you, the investor, is diluted because that means there'll be roughly 1.2 million worth of shares that reach the market, but it's a trade-off.
It's a hybrid equity raising. So they do have
Yeah,
retain the option to buy this back in the future if they want to, but that $1.2 billion could become just dilution at some set price in the future.
right.
It's a common way that growth companies are raising capital when they need to. So it is debt, but it's hybrid debt since it has a convertible option to it. So just something to think about.
This next paragraph is very weird to me, but let's go.
Uh, a record year for non-GAAP profitability. We generated 352 million in cash flow from operations. So 35 million in cash flow from operations on 1.4 billion in revenue.
350 352, not 35,
Yeah,
352.
352. Woo!
And
That's
what
a
was sales again?
very that's a very high cash flow rate for 1 billion in sales. I mean that's like a
That's
margin of
25%.
20. Yeah, okay. And their gross is 40%. Wow, is this a lean organization?
Now that's not their free cash flow, but it's still pretty good.
That's cash from operations. Correct. Still, we repurchased 3.2 million shares for a total of $500 million at an average price of 155 per share. So they're bought back stock, even though they did a common stock offering,
Okay,
even though
so
they did a
that's the part that was very confusing to me, that they're taking on convertible notes and they're buying back shares. That's
that's a head scratcher.
yeah, and then they say Warren Buffett. Like, to me, it's like a name. We know this doesn't make sense. We're gonna name drop Warren in here, and
Yeah.
then everything's okay.
This represented 2.4% of our shares outstanding. So yeah, but you issued 1.2 billion in convertible notes. So unless those are well, let's just pretend we don't know the convertible price, right? If
No,
it's
we don't.
converts at $500 per share,
Right.
right? That
Then
might have
it's
been a
not
good use
actually
of
1.2
capital.
billion. Right.
It's weird to me to see a company do a convertible notes offering and buy back its stock at the same time.
That is exactly what I was. Yeah, I agree.
We take a page. We care. We take care of our needs of our business. Follow to ensure we have enough cash to future acquisitions. Once these are done, we engage in opportunistic share repurchases if we believe our share price is less than conservatively calculated its intrinsic value. So
For what
that
it's worth, it's
that
190 today, and they bought back at 155. So
yeah,
they did all right there.
we achieved record revenue with more than 78% growth in the U.S. Our U.S. international mix was 80% U.S., 20% international. Revenue increased 74%. Strong growth in microinverters and batteries. Our growth was broad-based. We work with installers of all shapes and sizes, and it's no secret that we celebrate small and medium-sized installers. Okay. In Europe, our revenue more than doubled. We expanded into Italy with our microinverters and our batteries, in Germany and Belgium. So they're expanding internationally. Europe is leading the move towards clean energy, not only by adopting full home electrification with electric vehicles and heat pumps, but also using self-consumption with solar batteries and storage. We're excited about our growth opportunities, particularly in Germany and Netherlands, followed by, okay.
I mean,
Um,
that's becoming only more important as natural gas supplies to Europe are called into question.
okay. In Asia Pacific, our revenue increased 80%. We look to capitalize on the recovery. Latin America grew 77%. So really strong growth around the world. Puerto Rico is one of the areas with the highest penetrations of batteries to cause to frequent outages. Yeah, that'd be great to make the Puerto Rican grid much more resilient
Mhm.
with batteries. The supply chain crisis, we are to be well ahead of supply. Oh, demand is ahead of supply. We were tight on semiconductor gate chips and ASIC chips for the microinverters, but we recovered. For batteries, we experienced global logistic challenges with sharp increase in ocean container costs and port constraints, causing long lead times.
Ooh,
Yeah, their
14
growth
to
was,
16 weeks.
yeah, that's a long time.
That is a long
It's a
time.
quarter, 4 months. Um, Again,
Just
their
sitting out
growth was
there.
very impressive given everything that's going on. We built a
Yeah.
total capacity of 5 million microinverters. We added a second line fully automated at our in contract manufacturers in India, 1.5
Ooh,
million microinverters.
I
Have a
wonder
line
where
in
the other one
Mexico.
is. Okay, so there's one in India, one in Mexico.
Yep.
That's good because, Bell
Romania.
Tunnel just asked that's really good because, one of the questions, and I think it was fair, was how many are in China? And so it says 4
Probably a
locations.
bunch.
Well, it says 4 total, one's in China. The rest is
Yep.
Mexico, India, and Europe. Okay.
Yep.
That's
And
really good to know.
in agreement with Romania with Flex, I'm guessing that's Flextronics. Um, uh, our batteries, our two sources are lithium iron phosphate, LFP, and their capacity is 180. Our existing cell pack suppliers can always add more capacity if required, and we're continuing to discuss with them. So they're buying their batteries. Okay. Thermal stability. We are always looking to advance our global of our supply chain battery. We're based in China and we're reducing supply.
So
We're
the cell
reducing.
pack is China
Yep.
primarily.
We optimize pricing for installers and continue to improve the installer experience by simplifying commissioning and reducing installation time. That's our goal, is to reduce the time to 1 hour, allowing installers to install and commission batteries in less than a day. Great. To be always informed. New features for the batteries. Okay. Load control. Our systems can integrate with most leading models of home standby AC generators, providing enhanced performance. Homeowners can monitor their power in real time by the battery.
Is that what
Cool.
yours looks like?
So I don't have I haven't checked the app in a while. When I first
Mhm.
got solar panels, I was checking it every day,
Oh, yeah,
and
of
then
course.
after like 90 days, I was like, they're
Yeah.
working.
The light turns on.
Yeah. Enphase system can integrate with most standby generators. That's cool. We are participating in aggregators, partnering with aggregators and utilities to enable grid services. This will enable the utilities to leverage home batteries instead of building polluting peaker plants. In doing so, homeowners get paid for sharing their batteries. During 2021, we announced our participation in Connected Solutions, an incentive program implemented by 3 utilities in
Hey,
Connecticut,
look at this.
Massachusetts, and Rhode Island to reduce electrical demand during high use periods. Hawaiian's electric battery bonus gives us, yeah. So I'm definitely going to be looking into this.
So, I mean,
Um,
that's a really interesting thing for those who don't know, like a polluting peaker plant, it just means that when you reach maximum demand, there's some plants that have to be built just for those moments when there's max. So, like those 2 weeks in August when it's super hot
yeah,
or when a cold spell hits in the middle of the winter.
our net promoter score was 69% exiting this year. That's a good score. Feed service.
I wonder, is that
Uh,
with installers, do you think?
uh, I don't know. It doesn't say.
Okay.
I don't see. We've used our unconventional ways to power up the systems and getting portable generators. We learned that 5 to 10% reserve charge in batteries will help the black start will help black start the system the next morning when the sun comes up, and our applications are now automatically set to retain such a reserve.
Huh.
Okay, so they're getting better through field testing. 2 hour weekly. The next is the agenda is quality. We look at quarterly defect Pareto. We're getting on the route. Okay. We have a 5 year limited warranty that extends 15 years overall. Always connected. Our next promoter score was 69%. Our goal was 70%. Um, Active installers. Yeah, I don't know if that's for installers or for end consumers. Anyway, we started shipping of our new batteries. Community is growing to be a truly global with more than 170,000 members. The Enphase community for direct engagement with installers, 1,000 articles and 8,000 questions answered. So they have a bit of a come to our website to learn about it.
Yeah. They've got some fans.
Yep.
I
Start
wonder how
production
much
of
they
our
spend
new
on sales and marketing.
microinverter can provide sunlight backup even during an outage without a battery. That's really cool. That is nice to see. Often assume their solar will function if the sun is shining, even during a power outages. This has unfortunately not been true until the IQ8, so they can
Very
do that.
interesting.
Cool. We acquired Clipper Creek at the end of 2021, which offers level 2 AC charging solutions for residential and commercial customers. The increasing penetration of EVs has significant implications. 80% of EV charging will happen at home. These energy consumers will significantly increase with the addition of an EV. So this is a new business for them, but this was acquired,
Mhm.
expanded. We acquired provides proposal and permitting services.
Hmm.
Um, Serves 25% of North American installer base. Yeah. Okay. Cool. That sounds like a
Interesting.
nice one. They're really trying
Mm,
to build up their services so they're a one-stop shop for
well, I was gonna
installers.
they're trying to become completely vertically integrated, it seems
Yeah.
like.
Predictive software platform for clean tech service landscape with for on-demand workforce. High
I
quality
mean,
leads to solar installers. Wow, they're really even trying
they're
to get
they're
ahead of
working
them.
the installers is where this is at, right? Like, that's
That's
the
that seems to be
relationship.
their major customers. Yeah,
Yeah.
several tools in house: lead generation, solar design, proposing, permitting, O&M software. O&M. I don't know what O&M means. Do you know
I
what that
don't
means?
either. Let me just say though that I think that this approach is interesting and I applaud it. I still don't understand buying back your own shares when you're making all these acquisitions.
Okay, you're
Like,
focused on yeah, you're really focused on that. We beat our 35, 15, and 20. We introduced our 35, 15, and 20 baseline financial model. It stands for 35% gross margin, 15% operating expenses, and 20% operating income, all as a percentage of revenue on a non-GAAP basis. Is that we won't launch a new product that is not capable of meeting a gross margin floor of
huh,
35%. Our actual numbers came in at 41, 16, and 25, 25% operating margin, beating the baseline financial model. Our GAAP net income was 145 million, resulting in diluting earnings per share of 1.02. All right, if they're already putting up 26% operating margins, right?
mhm.
25% operating margin, then this number is real. And this company is optimized for profits. Therefore, the price to earnings ratio is meaningful. The
Right.
PE
But I
ratio
would say
is useful here.
on a non-GAAP basis because they're at
Right.
340 million on a non-GAAP
Oh,
basis.
you're right. Oh, I'm sorry. Okay. So Correct. So the PE ratio we saw on stock card must have been GAAP because it said like 190. So
Well,
this
let's
is
see.
a
So it says 241.
241,
So
right?
that
So what's
well,
the stock
that gives
trading
it a
at?
PE of 79. So, no,
79.
I
But
think
that's a real
it was
number.
pretty, yeah, it's 79.
So so we don't have to use the price to sales ratio. We can use the PE ratio. So the PE ratio here is meaningful, it's useful, and it's 79. So that's expensive,
Mhm.
especially for a
Yeah.
hardware company with low margins and likely to be a non-recurring revenue business model. Unless you consider these installers themselves the customers, because then they're buying continually for
Yeah.
their installers. So it's kind of like a chip maker, right? It's like it's not recurring revenue, but it sort of is.
I'll tell you one thing, the fact that most of these installers are small and medium-sized businesses is actually a great thing in terms of the company's anti-fragility. It would be a lot easier if there was just like 1 or 2 huge installers and they got a relationship with them. Like, it'd make it easy to ramp up real quick, but it would also make it very fragile. The fact
Hmm.
that these are small and medium-sized installers means that there's more work on the front end, but they are much more anti-fragile because just one quitting won't affect business.
There you go. Okay, so GAAP and non-GAAP for some reason. Okay, so free cash flow was 315. I'm assuming they're using the definition that we like. Non-GAAP earnings were 254 basic, 241 diluted. Wasn't it 274 up here?
I think it was 241 is what they told us.
241. Okay, so yes. So that's a metric you can look at to make a decision about the company's valuation. Not, I wouldn't use that one. Well, it depends what you want. Do you want GAAP or non-GAAP? But obviously, there's a big delta. Is it stock-based compensation? That's the difference between the two, or is it
Depreciation,
acquisitions?
amortizations. Yeah.
Acquisitions. What's going on there? What's the big difference between GAAP and non-GAAP? Our strategic focus, new systems. Here's our battery. Roll out new apps.
When they say the
Electric
strategic
vehicles.
focus, I'm just curious, do they put something in there about how they just wanna control they want to optimize around the installers?
That seems to be their customers that they're going for, right? And that
Yeah.
makes sense if they're an equipment manufacturer that's selling to them, right?
Yeah.
The Porta offers security indoors. What is that? This is like a new product that they have on the way. We have some critical products to launch. We think the IQ Battery 5P with 2x the power will be a game changer. We'll launch in the small commercial solar market in the US and residential solar market in Australia, Brazil, and India. The portable energy system is our first foray into the consumer segment and provides energy security indoors as well as energy on the go. We plan to add networking to Clipper Creek and charge them. We also expect to finalize. So you can use this as like a portable handheld battery for
Yeah,
powering
it's
indoor
like a
stuff.
generator.
Yeah.
Can you go up just a little bit? Because they talk about their customer here, provide the best customer experience. If we put the customer first in everything we do, we come out ahead. It's that simple. We'll measure feedback from customers, listen, act, swiftly solve their problems. We plan to simplify commissioning and target reduction to 60 minutes. We'll maintain world-class quality levels and aim for 1-minute wait times. We expect products to have a learning curve. We'll anticipate customer problems using the power of data and analytics, measure what matters. To me, they're talking about the installers.
That's exactly how I say it, because they say
Yeah.
this is our first foray into the commercial market, into the
Right.
consumer market. So their customers are the installers.
Yeah.
So
So I
like you
might be
said,
beating a dead horse, but I think that's really important.
right. But I do like that they are focused on essentially vertically integrating everything for the
Yeah.
installers because that provides lock-in, that provides switching costs more so than it would be if they were just an
Exactly.
equipment manufacturer. So
Exactly.
this business model is better than I thought at the
Th
start.
That's where the moat is.
Um, our pioneering work, full home electrification is slowly but surely coming. Countless countries are on the way. Our business principles and making acquisitions, we're purchasing our shares. We've had more than those thanks to our employees, etc. So what are the differences here between GAAP and non-GAAP? Let's start to look. So gross profit. So stock-based comp a little bit,
Is that 500
stock-based
million?
comp a lot.
Okay.
Stock-based comp. Yeah. So 100 million is stock-based comp. Loss on partial settlement from convertible notes was a big one. Non-cash interest expense was a big one. So the big delta between these two is stock-based comp. So stock-based comp is high, and
And this
then
isn't
some
a
other
company that just went public either.
no, 100 million, 100 million on 1.4 billion in sales, but a low gross margin company. Yeah, it'll be interesting to check what their long-term dilution rate
Is that like
has been.
20%
Obviously,
of gross profit?
yeah,
Wow, that is high.
that is high. But their investors have done just fine,
Yes,
even without that. All right, so let me X that out. Okay, so I have an investor presentation here. Let me share
great.
that on the screen. See what we can learn from that. Okay, so we can skip over. Oh, good, our business. Founded, yep, all those. We saw all that. We know the numbers. Oh, good.
There, Chief
So,
Product Officer. That
oh
looks like
yeah,
a familiar name.
co-founder. Excellent. He's still involved. Chief operating officer, chief commercial officer. So he says, I'm a product guy. You take over the CEO stuff.
I love
Um,
that.
I do too. I do too. Enphase microinverter solutions versus traditionals. So traditionals are in DC to that, and Enphase has the distributed that we talked about, proprietary networking, gateway technology, collects performance data, cloud-based energy management, platform and analytics. Yeah. So okay. Core difference, semiconductor integrated and predictive control, software architecture, and assembly, energy, and management solutions. So there's more going on here than we just make inverters and sell them. Much more,
Mhm,
and that is good news for shareholders. And I now I'm getting a better picture of why this stock has done so well.
mhm.
Um, Higher quality, low cost, yeah, all that kind of stuff. We focused on operational excellence, 30-second wait time, gross margin management, value-based pricing, product segmentation, cost and supply chain optimization, our resilient business model, CapEx light, no big factories, operating expense efficient, headcount is 63% are in India,
So India
only
is the key
1% in
one.
China.
Yep.
I wonder if they're probably made in China, but I wonder if what's in India? Was that
The
R&D or
customer
is that
service could be. The customer
okay?
service is
Yep.
the big one.
Yep, sustainability, our strategy, build products, rearview mirror, small microgrid solutions, one-stop shop, reliable, scalable, simple, safe. You can add on batteries. Cool. I'm gonna research this as a consumer
There you
when we're done
go.
here. I think that's pretty cool. Monitoring and control, load controller, EV chargers. Okay, acquired Clipper Creep, high quality, versatile. 1 in 7.5 non Tesla vehicles uses Clipper Creep charging. One in, okay, reduce cost, add smarts. So SAM, is that like TAM?
Serviceable addressable market.
Okay, so it's point 200 million today, estimated to be 6 billion in the future. All right, can they take this and turn this into can they increase that number? Fuel cell made by Upstart Power. Turns on, tops off battery, and turns on reliable maintenance and low emissions. Grid tied. So is this an acquisition they made? So they're getting into the fuel cell market.
I don't know if that's an acquisition. I just think that they're saying that their chips are inside of Upstart Power's stuff.
Oh, all right. Generator, grid services, 8 programs, business model, aggregators and utilities, mainly on batteries.
Those relationships could be a moat. It's hard to know for sure, but being integrated with the utility provider is a big deal.
There you go. That's cool. A comprehensive digital platform. System estimator, roof graph, solar graph. So all this is the software that they offer. Yeah, this is a software driven company on the back end. The Enphase installer vision, lead management, design, contract, permitting, everything. So they make an acquisitions to build out this. Cool. Uh, Great. We saw that. We saw the financial overview.
Yeah.
Share of wallet per home. $2,000 per home. 2021, $9,000 per home.
for
2023,
the battery.
$12,000 per home. Yeah, with the battery.
I mean, the problem with this is that you have to have the best product available every cycle.
Right. Apple. Right.
Yes.
You have to continually
Yes.
invest and keep
It's
that
not that you
going.
can't do it, it's just that
Right.
it's not as much of a sure slam dunk thing.
Quarterly gross margin percent by year. So Q1, oh, it used to be 26%. So gross margin has really risen.
Mhm.
Revenue has grown, operating expenses have declined as a percentage. Yeah. So this right here is operating leverage, right? This is operating
Mhm.
leverage beautifully, but the operating leverage is behind them. It's not ahead of them. Massive market, just the beginning. Appendix. Um,
Do they have a balance sheet there?
did they?
That's what I wanna see. I wanna see how much cash that they've got. Nope, they didn't.
No. This is
Alright.
all just that. We can get that from the most recent
Yep.
earnings reports. Let me see if I can find that and pull that up. Do you want to look at some questions while I get that going?
Yep. So D brings up a good point, and I think D brings up the point that is the crux of everything here, and says 40% gross margin isn't sustainable in the long run. Solar is already a commodity, and battery storage will commoditize as the global battery production ramps up. That is the major concern. I think it's probably, Brian, what both you and I were thinking when we got started, and also says the value additions from software ecosystem isn't so complex that they can have a sustainable mode over the long term. I think
Mm,
it's all about the relationships with those installers.
fair,
Like,
fair.
if it were me, I would be watching how many installers they call out every quarter.
Right. Okay. Excellent, excellent points. And I'm just going to pull up the most recent 10K and the proxy
Mhm.
behind the scenes here. But you can see the most recent quarter. So this is their quarterly results, and we just wanted to look at the most recent balance sheet that they have because we kind of understood.
Yeah, most of this we
Um,
just went through.
we just went through. Oh, for the outlook for the year,
Outlook.
revenue to 420 to 422, which includes our new battery shipment. Gross margin down a little bit. Non-GAAP operating expenses. All right. So there's the quarterly numbers. They have what's the dilution rate? Uh so year over year, the dilution.
Well, it's because
Oh,
they
but that
bought
was with
back
the
all the
buyback.
stock.
Yeah, yeah, they bought back stock. Right. Okay, so cash balance after December 31st, 2021, 191 million plus that. So they said 1 billion in cash, right?
So it's like
Just over.
1.1? Yeah.
Accounts receivable was up big. Inventory was also up, but that makes sense given the supply chain. Goodwill was up big
Oof.
because of the acquisitions that they're making. 181 million. I mean,
It's not
compared to
terrible. It's
a
just
billion
up
dollars,
a lot.
yeah, it's just up. Okay. Short-term stuff, current liabilities of 500 million, deferred revenues, non-current. What would be that deferred revenues? What would be deferred revenue there? Stuff that they booked that they've sold, but they haven't accounted for as sales.
Yeah,
And
I mean,
then,
like, it could be supply chain related, like, people have put down money, but the products haven't been delivered.
yeah, unless there was a software revenue that I didn't see, but debt would be just under a billion. So
So
more cash than debt, but this is
but
going to
not
be
by a
their
ton.
by not by a ton. Yeah, they took out 1.2 billion, so maybe they paid some back.
Yeah,
I don't
it
know.
it it looks like it.
Cash flow perspective, cash flow from operations was that, and then purchase of not a ton spent on property, plant, and equipment. So free cash flow of about 300 million, and it was about 190 million before that. Repurchase of common stock was $500 million. Um, okay, there. So I'm just gonna pull up one
Think
more thing.
think
Let
the
me
next
share.
big thing is the concentration I'm curious
Yes.
about.
Oh, 625. There we go. Here's the 10K, the annual report. I'm just going to do a control F search for concentration. Yep. So they're calling it out. Uh, we mitigate this. Financial instruments. Concentration of credit risk. Accounts receivable with major customers. December 31st, one customer represented 38% and 36% of total accounts receivable. 2021, one customer was 34% of net
Ooh.
revenue. So that's that
That's probably
next gen
NextEra.
energy. Yep.
Yeah.
2021, they were 29%. In 2019, two customers were.
So
So there's
it's
one
but it's
customer that's
growing.
34% of revenue
It's gotta be
and
NextEra. So
growing. Yeah.
NextEra was 21% in 2019, 29% in 2020, and 34% in 2021.
Right. So that's something to keep in mind uh, in the proxy statement. Anything else from the annual report you want to see?
Nope, I
Oh,
just wanna see the proxy and Glassdoor.
we can read through the business model. Um,
I
oh,
have to remind you that
yeah, you're right. There you go.
yep,
Okay, so let's look at the proxy statement.
and the proxy statement will let us know about what we're looking for is ownership in the company. I'm curious to see if that chief product officer still owns a bunch.
Okay, so this is the CEO. He owns 2%,
Mhm.
and I
I
don't
don't
see
even
the
see his
founders.
name. Yeah.
So he must not be an executive
But
on there.
altogether, 4.8.
No.
That's
Oh yeah. Who's Therma John Rogers? 10. Rogers Macy Revocable Living Trust. I don't know who that is.
I don't either.
Is that a board member? You want to look that up?
Yeah,
Either way,
Thurman John.
inside ownership is low.
Yep.
It's low there. And then one final thing is Glassdoor Enphase. Let me just share my screen on that. 3.7. Ooh, I didn't
Yeah,
put this on the screen.
Rogers is on the board of directors, and he invested money in it in 2017, which is worth a lot now.
3.7 overall. Senior management gets a 3.5. Poof. Look at this.
Ooh.
It used to be way worse.
How many
And it
reviews
came
is that?
up. Um 89.
Okay.
89. Do they have their
Alright.
mission? Did they have their mission there? Mission brings a system-based, high-tech approach to solar energy, leveraging expertise, blah, 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 blah. Yeah, terrible mission statement if that's your mission. Our mission is to build the world's finest networked energy system and revolutionize power generation on a global scale, one solar panel, 1 kilowatt hour at a time. So,
What we heard was to advance a sustainable future for all, and I liked that one the best.
yeah, that was their purpose. They didn't have the mission statement, so they don't really fully understand mission because it's
Nope.
different on their Glassdoor ratings. But all right, I'm ready to start filling in
Me
our
too.
checklist. Okay, so let's go back to first off, is revenue recurring? Sort of. Profitable, yes. Free cash flow positive, yes. And beat S&P 500, yes. Today's date is 4/14/2022. Balance sheet. I will give them. I'll give them a 4 out of 5. A little bit debt, but more cash than debt. Gross margin was 40%, but it was stable slash rising. I'll give you 1 point there. Returns on capital, returns on equity, and all that kind of stuff were positive, and they were decent, right? So what were they? I forget what the return on equity was, but it was positive, right? Return on equity was
Mhm.
actually pretty good. Free cash flow is positive and growing. 3. Earnings per share, 3. Financially, very impressive.
Mhm.
Do they have a network effect or a product ecosystem? A product ecosystem. Do the products do they make more products that work better together? I'm actually going to give them some credit here because they
Yeah.
do have the battery system and the microinverters and the software and all that kind of stuff, and all of it ties itself together. And if you're going to use the microinverters, it makes sense to also use their software. So I'll give them 5 points for that. Switching costs, thinking from the installer perspective. If this company now helps you with lead generation, system design, ordering, buying, post management, and the software to do all that. I'll give them some points for that.
Yep.
I'll give them at least, I'll give them like 7 points for that. Do they have a durable cost advantage with scale, distribution, physical location, or vertical integration? Maybe. Maybe they have vertical integration.
Well,
They're not.
yeah, that's where it is.
Well, they're not building the stuff themselves. They're buying it, but they're vertically integrated. I'll give them 3 points for that. So I'm giving this company full credit for moat. Wow, I would not
There
have
you
I
go.
would not have guessed that, and that might be overly generous on my part. Might be overly generous. Optionality, I'll give them a 5,
Hmm.
if not a 6. Out of 7, because this company is launching new products and new services that are opening up new revenue opportunities. Organic growth has been high, 4 to 4. Are they a top dog and first mover? I'm assuming so.
If they're supplying NextEra, I'm going to go with yes.
Yes. Is their operating leverage ahead of them? No. All
Less.
the operating leverage is
Hmm.
behind them. Profits
Hmm.
are not going to grow faster than revenue moving forward. So you get a 0 on that one. Customer acquisition cost. Oh, did we look this up? What was their
No,
sales
but
and marketing expense? I don't think they broke it out.
I'll look at it real quick, but it can't be that high because their operating
Yes.
expenses were only 15%
Right.
of so it can't be
And
that
their
high.
customers are the installers. They're not yet consumers. That might be changing in the future, but that looked to be pretty good because their total operating expenses were 15% of sales and their gross margin was 40%. So worst case scenario, and they're not spending 100%. I'm gonna give them a 4 out of 5 on that. They're
It's
doing a really good job.
25% of gross profit.
Really good job with customer acquisition costs. Once a customer
Yeah.
is on board, is their spending cyclical, moderate, or recession proof? They've been riding the solar wave and they've been doing that successfully. I'll give them 4 points for that. Wow, I would not have expected this company was going to score this well. Recurring revenue, I'll give you a 2,
Mhm.
maybe a 3. Pricing power, I don't see their gross margin going over 40% from
No.
here, but I think they can pass along their costs to their customers because they're bundled in. So I'll give you a 4 on that. The founder is still involved. Inside ownership is low. It wasn't
Mhm.
even listed there. I'll give you a 1. Glassdoor ratings were low. I'll give you a 1. And the mission statement was okay. I'll give you a 1 there. How has the company done since coming public? Smashed the market. Are they buying back stock? Yes. I almost don't want to give them credit because I'm not sure if that's the way to do it. And then
And I'm
how have
telling
they
you it's
done?
4 for 4. I just
They
looked.
they 4 for 4. Okay.
Yep.
76. Any bad stuff? Yes. Accounting regularities? Nope. Customer concentration? You bet.
Yep.
Big time. -5. Industry disruption? Nope. Outside forces? Big market loser. Binary event? Extreme dilution? The dilution you might not come for. Growth by acquisition? Sort of. I don't know if I'm going to knock off credit for that.
Yeah, are you trying to keep
Competition.
this above
I
70? Is that
am. I think I
secretly what's
am.
going on
I
here?
think I am trying to keep it above 70. I
That's
want this
okay.
in my I want this in my thumbs up. I'm
Well,
far more impressed than I thought otherwise. But
I'm
your
going to
turn.
make it interesting then, because when we do mine, I just ran mine through. So for their mission statement, if it was just to advance the sustainable future for all, I give them full credit. But that wasn't highlighted. So I'm giving them 1 because there's just inconsistency there. For the moat, I'm giving them full credit for switching costs, 2 points. Because that network of products I consider to be more of kind of switching costs, and I'm going to give them 1 point for low cost production because they are vertically integrating the installer base basically. So 3 points total for moat. I'm going to give them 2.5 points for optionality because I think they got
Uh,
a lot going on here in
Two and a
terms of
half.
the 2.5 in terms of the products that they're offering. I'm really impressed. Financial fortitude, I'll give them a half point. They're even basically net cash, but they're free cash flow positive. Now concentration, this is where I got to knock points off. I'm going to take 2 points off. I should probably take 3 points off if I'm being consistent, but just 2. Glassdoor 0 because it was between 3.6 and 4. Founders involved +1. Ownership 0 because it was above 4%.
Barely.
But barely. But you see that this lands in my fragile category. The key to all of this being that concentration risk. Now, that's why we always say it's what you find out that matters, not necessarily the score. If you're comfortable with that concentration risk, well, then that's not that big of a deal. If you're not,
Right.
then that's something to be aware of.
All right. Well, I am happy to have this as a one that we disagree on. So
Yeah,
this is
me too.
going in your fragile portfolio. So I'm going to place a new order for that Enphase, and we're going to do a buy in your fragile portfolio. We're going to do 5 shares. The
5.
score was
Mhm.
6,
Mhm.
and I'm happy to put this in my quality checklist. I probably gave the company a couple extra points to get it over, but
Hey,
I'm much more of a believer in this company than I would have guessed when we started.
these checklists are a way to guide our research. They are
Right.
not the end all be all of decisions.
That's right. That's right. So I understand why this company has done so well. Quick reminder to everybody: if you want to follow our portfolios, head over to stockcard.com, and the Beat the Bryans contest is still ongoing. If you want to get in on this, you have a chance to win $1,000 at the end of the year, and we've seen some people that are up big on us, just kicking our butts.
Yep.
So very cool with that. So we have a few minutes left. Can you explain the concentration risk more in detail?
So, Carlos, basically what that means is Enphase, or sorry, NextEra Energy buys a third of Enphase's products. If NextEra decided to go to someone else, it doesn't seem like that would happen, but if they did, that would be like throwing a bomb in Enphase's business model.
hmm There are some people here that disagree with our moat rating. They're saying that the software isn't as big of what the isn't as big an advantage as we thought. The gross margins are not sustainable. Uh, O&M is operation and maintenance. Thank you.
There you go.
Thank you
Mhm.
for that definition there. How reliant on China is there for materials? So they seem to be very reliant from a product perspective, but from
They do
a
have 3 factories outside of China, though, so
4,
that's good.
yeah, 3 outside of
No,
fire. Yeah,
4.
good,
One is in
correct.
China, 3 outside.
Correct. Yeah. So this one is gonna be totally dependent on how comfortable are you with that concentration risk. I'm gonna give them the thumbs up. I think that they can continue to ride the solar wave, and I am far more impressed than I would have guessed at the
Yeah,
beginning of this. Which is
I agree.
that's my favorite when it's like I go in with one thought and we have another. But is it a buy? That is completely up to you. Boy, is this company expensive, trading at 79 times earnings. So the thumbs down might be the right call here.
We'll
I'm not
find
sure,
out.
but hey, yeah, we will find out all of that stuff. Thank you so much for watching. We hope that you learned something. I certainly did. This is going to be a fun company to watch. See you guys next week. Brian's out.